Hello and welcome to Business Today. I am Siddharth Zarabi from the World Economic Forum at Davos from the India Today Business Today studios here at the Media Center. And with me, Mr. Dinesh Khara, the Chairman of the State Bank of India, the largest bank and financial institution in the country. Mr. Khara, thank you very much for joining us. It started raining and we know that inflation is also raining down on the parade of global growth on India as well. But before I come to some of those matters, I just want to get your quick view on how you're finding Davos this time around and what's the buzz around India and other key matters.
I think when it comes to Davos, India team is a very strong contingent which has come, and it's a very strong representation which is being put up before the world community. So I think to that extent it's a very strong India story which is being talked about, and rightly so, because if we look around the globe, perhaps India is the only oasis where probably the kind of growth which is being seen. Of course, what you rightly indicated right in the very beginning, the inflation reigning and its likely impact, that of course is a global scenario. We are a part of the global community. But if we really analyze the inflation scenario in the country, essentially inflation is attributed to two major factors. One is inflation fueled by the crude oil, and second is the edible oil. You would have observed that in last 2 days, various measures have been taken by Government of India in terms of reducing the taxes on the petrol and diesel, and also it's also being talked about for the edible oil too. So I think to that extent, whatever is possible by a government, that is being attempted. The other very important feature which I must talk about is relating to the edible oil and the kind of restrictions which are there on the export of palm oil from Malaysia and Indonesia. They are being relaxed. So that will also lead to some kind of easing of situation as far as edible oil is concerned. But yes, of course, crude, I think we'll have to perhaps wait and watch for some more time. But nevertheless, efforts being put in by the government to reduce the taxes, etc., are very welcome. I'm sure it will lead to some kind of a easing effect as far as inflation is concerned in the economy.
Mr. Khara, because like you very correctly said, most of the inflation currently is supply side driven. But there is also the other bit about a liquidity overhang, and that being sort of reined in. And perhaps from all indications, what the RBI, the central bank, is telling us, a pre-COVID kind of interest rate environment is in the offing. For the general consumer, and the SBI, I perhaps need to add this here, runs one of the largest loan books in India. What is in it for the general consumer? Should he be prepared to fix his interest rate right now and opt out of floating rates? Just as an example, I know everything is floating now mostly.
Yeah. No, I think, well, of course, the RBI policy rate went up by about 40 basis point midterm, and which has actually led it to 4.40, and pre-pandemic it was at 5.15. If that is the kind of a number, I'm sure RBI would be looking at various other numbers also before they take a final call. So I think that seems to be the outer boundary as of now. But nevertheless, as far as the retail consumers are concerned, you know what it means for the retail consumers. It will be of course, banks will try to pass it on to the extent possible wherever there is a floating rate of interest. And of course, when the interest rates are on the downward track, majority of the retail consumers had opted for the floating rate interest. So that is a reality, and on the upswing, of course, it hits. But nevertheless, I think it is also a function of the excess liquidity which is there with the system, and each of the bank will probably try to calibrate their risk premium also, keeping in mind the excess liquidity which they have. So to what extent they will be in a position to pass it on and how much they would like to pass it on will be a function of the decision taken by the various alcos in different banks.
So Khara, loan melas seem to be a thing of the past largely, but do you expect this changing interest rate cycle now to impact demand in interest rate sensitive sectors, and that demand, for example, in the automotive space or in the affordable housing space, which I believe has significantly underperformed, would be sensitive to an interest rate hike cycle?
Actually, when it comes to the retail loans, invariably the evaluation matrix there is the EMI to NMI, equated monthly installment to net monthly income. And during the inflationary period, it is invariably seen that the monthly income also goes up. And it is now being talked about that the salary increase is somewhere in the range of 9 to 10% for the corporates. That is something being talked about. If that is the kind of a salary increase which is likely to be seen, and the kind of inflation increase which is essentially, interest rate increase which is essentially talked about in terms of 40 basis point or 50 basis point will not have as much of impact on the EMI. And invariably it is seen that during the inflationary period, it makes a lot of sense to acquire assets with a leverage, because eventually the EMIs will remain more or less constant, but income will keep on increasing and value of assets also keep on increasing. So I think in that kind of a situation, I don't expect that affordable housing and the vehicles, etc., perhaps those which are being used for the personal use, they might not really experience any kind of a dampening effect as far as the demand is concerned.
You expect some impact on the commercial space. What about the farm side?
The farm side also may not have as much of impact, because normally farm side is not as much linked to the external benchmark or the variable rates. So I think that also I don't expect much of a change. But when it comes to the corporate side, the corporates have deleveraged themselves quite a lot during last couple of years. So that may not actually witness much of a change in behavior. But when it comes to SME space, there it depends upon how much have they leveraged. And my general assessment is that this cost is inflation, interest rate cost is about 8% to about 12% for any SME. And much of it will depend upon the kind of leverage which they have taken. So I think if at all it's an increase of 40 basis point or 50 basis point, it may not really impact quite a lot as far as the interest cost in terms of the overall cost is concerned. So, but I think for SME, what is most material is the timely availability of credit,
which is very
important. And I think if at all it is at a reasonable price, and invariably banks are very keen to lend to SME space, provided they have got a visibility of the cash flows, and they would be more than happy to probably lend them at a very reasonable price. That's what my assessment is.
Khara, before I pick up the other point that you gave us, and since we are at Davos, that's actually very significant, deleveraging and how Indian industry is shaping up. Just one quick point. By Diwali, what should be the average loan rate that Indian consumers can expect? I'm not asking you to comment on RBI or on your decision, but generally speaking, 50 basis points higher from here, 100 basis points higher from here.
I think much of it will depend upon the variables, because it's a function of multiple variables, how the inflation will really pan out, and how much liquidity will be left out in the system. So I think these would be the two variables. It's too difficult to predict, but in a broad assessment, it is very difficult to hazard a guess, I would say.
But what about fixed deposit rates? The other
fixed deposit rates might witness some kind of an increase. But yes, of course, again, much of it will depend upon the excess liquidity which is there in the system, and which again is a function of the kind of credit demand which will be seen going forward.
Good news for savers, not so good news perhaps for borrowers. But then it's said that if you have the money to borrow and build an asset, the best time is now and not in the future, obviously not in the past. Mr. Khara, this was, perhaps some of the more immediate concerns. The broader point about deleveraging, and we've seen 5-7 years of the NPA cycle, and it's impacted the broader India story. Is the deleveraging process over? Plus, what's your own sense? Is the NPA story also largely over? There might be fresh pressures that have built up due to the pandemic, but I'm taking you back to 2013-14 and not just 19-20.
No, I agree with you, because as far as the bank's balance sheets are concerned, perhaps they are quite strong for the system as a whole. And all the banks have provided very well for their impaired book and the likely impairment which they might experience. So I think to that extent, I don't expect any kind of a surprises as on account of asset quality. Having said that, as compared to 2013-14, one very important factor as compared to 2013-14, which was we had started seeing that there was a whole lot of leverage which happened between 2008 to 2013. Here is a situation where it was a leverage as far as the corporates were concerned, it was quite low. So at this point of time, it's a very different situation. So I think, so to that extent, I don't expect any kind of a shock in the, as far as the bank balance sheets are concerned. I would rather say that banks are fully equipped to support the growth. They have also strengthened their underwriting practices during this period, and perhaps it will go a long way in terms of supporting the healthy growth as far as the credit piece is concerned for the economy.
Since you said 2008, and not to make this a history lesson, but the last 30 years, and obviously this was the worst NPA kind of build-up that we had seen in the Indian context. 2008 was a shock, 2019 was a shock. Now there is fresh Russia, Ukraine, global instability, what's happening in China. Some people say that we are on the cusp of a lift-off. Others, and there is a significant section which says, no, the economy is still in the shambles. Please don't just go by the headline numbers. There is underlying pain. How would you describe the situation?
No, the way I look at the economy today is that, in the past couple of years, we have learnt our lessons well. And a lot of strengthening has happened both in terms of the economic ecosystem, in terms of the infrastructure relating to economy. So I think to that extent we are much better placed. The kind of things which have happened, like the insolvency code is now in place, which was not there earlier.
May I interrupt you, sir?
Yeah.
Because you spoke about the insolvency code and the first dirty dozen, the second lot of companies that was frog marched to the court. But we now see insolvency is not delivering too many results. For your bank as well, sir, how big have the haircuts been on an average?
No, I would say that, that insolvency code has brought in a ecosystem through which the resolution of the brownfield assets is now possible.
Okay.
So I think earlier when it was not there, not that everything has to be resolved through the IBC or the NCLT. Equally important is that things can be resolved through the compromise settlement. Things can be, but all that is possible because there are various players available in the ecosystem. And the other very important aspect which I would like to highlight is that probably it has led to a responsible borrowing behavior. It is no more a fiction that the control of the enterprise can be lost.
But sir, is responsible borrowing also tantamount to lesser capex by corporates and an overall investment rate which is still nowhere near the peak rate?
Actually, I would like to draw upon one statistics. We have seen the kind of traction till financial year 22, and the source of course project today, wherein it says that 70% of the new investment has been brought in by the private sector. So I think which is a very, very handsome number. Of course, it is before the inflationary impact which was seen on account of the geopolitical tensions, but nevertheless it's a very clear reflection of the mindset for the private corporate side also. So I think they're all waiting, so long as there is a visibility of the demand, they're all waiting for coming out with the new investments. And I would say that we have seen that the capacity utilization in the economy has improved as compared to the pre-pandemic level. It is now at about 72%, which was at about 69% before the pre-pandemic. So I think with that kind of a scenario, and if at all the demand continues to be sustained like this, which to my mind should happen, because whatever little restrictions were there in the contact heavy industry also, we have seen that even the tourism is also coming with whole of vengeance. So I think all this augurs very well for the economy like India. And the other very important aspect is the supply chain disruptions which have happened on account of the China slowing down. This has given an opportunity for a country like us. The kind of PLIs which have been announced, and also it is an incentive for coming out with the new capacities. 13 such sectors have already been identified. So I think this is encouraging, this very clear message from the government that you please come and put up your production capacities. So I'm sure, with the demand being constant, demand being shown on the upside, this is a very healthy atmosphere which is there in the country, but for the only dampener, which is the inflation, and that is essentially attributed to the geopolitical and not because of the situations which are obtaining in the country. Because when it comes to capacity side, there is no constraint. Actually, on the it's a cost push inflation which we are seeing today.
So, for your own loan book, what is its size? How many checks have you been writing, let's say, in the current financial year?
So, I would say that even today, we have seen the improvement in capacity utilization for the last quarter of the previous financial year. And it has actually improved by almost about 6%. Working capital underutilization was somewhere around, it was as high as about 55, 56%. It has come down to about almost about around 50%. So I think rather it is much lower rather today, 46% is the underutilization. So I think to that extent it's a very clear signal that people have started availing the facilities. And even the term loan which are unutilized, even there also we have seen a positive traction. People have started availing the term loans.
And you expect that to continue?
We have got a pipeline, unavailed working capital plus term loans plus proposals in pipeline. They are as high as about 5.5 trillion for a bank like ours. 5.5 trillion Indian rupees.
5.5 trillion Indian rupees, that's a large number. Mr. Khara, let me also turn to another aspect, which is the growth in the digital economy. And I am talking about the Fintech revolution that is happening. Again, a broader question. The crypto assets and the central bank currency as and when that happens, but for India's largest lender and you as its chairman, how do you see this world shaping up in the next 3 to 5 years? Because there is always a bit of hype. What's your own hard, real sense about this?
See, the way I look at the fintech and its role in as far as the financial sector is concerned, I would say that it offers an opportunity for collaboration. It is because fintech and startups are invariably coming out with various solutions. For an entity like ours, which is a bank and which is also having its own, which have to deal with multiple issues. So we are also always looking at these fintechs as the solution providers. We look at them as a collaborator. We don't look at them as a competitor. Rather, for fintech also, the kind of scale which we can provide, which it may not be available otherwise. So I would rather say that it's an opportunity to collaborate and strengthen the fintech environment, which will eventually be mutually reinforcing as far as bank and the fintechs are concerned.
Mr. Khara, for the average viewer, not for a corporate viewer, business viewer, what are banks going to look like 10 years down the line? We already listen to this, and my parents talk about, online banking, their affairs, SMS and all of that. It's good. Most of my whatever little banking happens from the handset. But how is it going to look like 5 to 10 years, and where do you see SBI in that revolution? There's one underway which you yourself agree.
So actually, the way we look at it is that perhaps for a bank like ours, we will be phygital, which is physical plus digital, because the kind of variety of customer whom we serve and the kind of geographies which we serve, we have to have the physical presence. We cannot
will you allow me an interruption? When you say phygital, didn't COVID and how our banking system responded wonderfully to it, nothing stopped, which is great. Our IT networks, and you kept the whole country running. Do you really still believe that the first 3 alphabets of phygital, and he's talking about PHY, are they still relevant?
They are still relevant because during that period also we have seen that our 22,000 plus branches, practically all of them were functioning. Because
no, you kept your bank running, but for the customer,
so because the kind of customers who are looking for a physical service also, I don't think they will not be there maybe 10 years down the line also. But at the same time, our digital transactions are as high as 77%. And mind it, I must share with you, 15,000 transactions per second is the run rate which we have in the bank. So you can
15,000 transactions per second.
So that-
77% transactions digital. Is there an absolute number also that you can share with us?
No, that number I will not be there. It will be increasing every
I tried my luck.
it will be increasing every day actually, if I may say so, because the kind of traction which we have seen in our platform, it is quite remarkable. We have got a customer base of about 49 crores, and out of that about 5 crore customers are the registered user for our So that is a very large number considering.
That's a big base.
So that's a very big base, and we actually experience hits every day more than 1 crore.
So to those people who say सरकारी बैंक क्या करेगा, स्टेट बैंक है बट फिर भी सरकारी है, प्राइवेट बैंक के पास टेक्नोलॉजी है, प्राइवेट बैंक कस्टमर फ्रेंडली है, what would you say to them?
I would say that this is a bank which has been relevant for more than 216 years and will continue to be relevant for many, many more 200 years. And for that, I am very, very confident because we are investing well in technology. We are always feeling the pulse of the customer, and we believe in offering solution which the customers are looking for.
Mr. Khara, I wish you all the very best and your institution for that phygital bank, which as you said will continue for hundreds of years. That was Dinesh Kumar Khara, the chairman of the State Bank of India, with us at Davos. If you've been, thank you very much for watching.